All right, everyone, dividend investing. This is a dividend investing vlog today. This is a vlog style video because I want to share a bunch of different things with you. This is going to be real impromptu, but I have a lot of cool insights to share, a lot of fun stuff. One of the things I want to talk about is Coca-Cola and McDonald's, two of my top 10 favorite dividend stocks that I own. They just hit new all-time highs, so I'm really excited to discuss that with all of you today. Also, however, I'm in the parking lot right now, literally just got out of a restaurant. We're having a party to celebrate my buddy who's moving across the country and celebrating sending him off properly. And literally, I'm just taking a break out of my day to record this video. And so I just want to do it vlog style. I want to share some insights with you about my day, my life, what goes into PPC, Ian, and how I think about life and dividend investing and how dividend investing fits into all of that. So let's get started with today's dividend investing video. So let's start with the good news, McDonald's and Coca-Cola. I want to do this first because a lot of investors out there, and we have a lot of new investors on this channel, they think that in dividend investing, you cannot experience capital appreciation. They think it's just about the dividends, that the stocks cannot go up. That is not true. And so I want to share this data. Today, McDonald's is trading at $203.05. That's where it closed. I first purchased McDonald's back in 2011. It's $73.53. And so you think McDonald's, old world company, they're selling Big Macs, they're selling fries, they're selling McFlurries, chicken McNuggets, Happy Meals. Boy, McDonald's, that's an old world company. Is it really possible to get growth out of that as an investor? Yeah, I'm up 176% on my first initial tranche purchase back in 2011. More than that, I'm receiving a healthy dividend. They are paying $4.64 a year if I take the quarterly dividends and I add them up. And if I take that $4.64 and I divide by my purchase price, I am yielding 6.3% on cost, 6.3 yield on cost. All kinds of info on my channel here on PPC Ian about yield on cost, so I don't want to go into that today. But I do want to share that I'm getting a huge dividend yield in terms of cash flow that I can use from McDonald's to pay my future bills. Now, Coca-Cola, it's not quite as good as McDonald's, but I bought that one in 2011 back at $31.19. Now, that is split adjusted because they did a 2-for-1 split along the way. And Coca-Cola is now trading at $51.40. And so I am up 65% on Coca-Cola in terms of capital appreciation. And I really like Coca-Cola here because I think they're getting into some really good markets. I like their Costa Coffee acquisition. I think that's a really key acquisition. I'm really excited about that. And they're making some good moves. So I really like Coca-Cola here. They pay $1.60 per year in terms of dividends. If I add up the quarterly dividends, that's what it comes out to. Take the 160, divide by my purchase price, which was $31.19. I'm yielding 5.13% on cost. And so I am winning with McDonald's and Coca-Cola from a capital appreciation standpoint and also a dividend yield on cost standpoint. And the key message here is these are some popular dividend stocks that a lot of dividend investors like. And when growth investors out there are thinking about dividends, they think, hey, I can't get capital appreciation there. Hey, I can't have huge returns. And it is possible to have huge returns, huge capital appreciation with dividends. And so this is just two examples of that I want to share with all of you. And we should all celebrate as a community. All of us that own these stocks that have done well, we should pat ourselves on the back. We should be really happy. And I just want to say congratulations. Congratulations to all of the McDonald's shareholders out there. Today is our day. New 52-week high. McDonald's, it's not a sleepy old company. It is a beast. It is a real estate company, a restaurant company. McDonald's is treating its shareholders really well, and I am loving it. Now, the downside of these stocks hitting these all-time highs is it's not as fun to buy when they're near these all-time highs. It's just expensive. It's expensive to buy them. If you look at my purchases, if you follow me on Twitter, you'll see some of my trades there. You'll see, and I like to buy stocks that are beaten down. I like to see stocks that are not near their 52-week highs or all-time highs. And so right now, I'd like to add more McDonald's, add more Coca-Cola, but it's a little tough for this investor. And so that's something top of mind for me today. Anyways, I am really tired right now. It's been a long day. I've just been in this send away, which was a lot of fun, but 2 hours networking, speaking with old friends. And so my voice is a little bit tired of speaking now, but I just got to do this video. Got to get it done for you guys. I love you guys. And so I have some other things I jotted down that I want to share today. One thing a lot of people have been asking me about is my vacation fund. I want to start this new fund. It's going to pay dividends. It's going to fund my vacations. I thank you all. There's been members of the community that are literally sending me emails talking about platforms like M1 Finance and others, the pros and cons. I'm pouring through all that data that you guys are sending me, and I really appreciate it. It's very helpful. One thing I had today, somewhat of a realization, is I own this company, Cedar Fair. Cedar Fair is a master limited partnership. It's a top 15 favorite dividend holding for me. Cedar Fair right now is yielding 7% almost as a starting yield, starting dividend yield, 7% range. And so what I started thinking is, hey, one thing, Ian, you may want to do, and this is just an idea, it just came to me today while swimming. I'll get to that in a minute later. But I was thinking, Ian, you could create these new accounts or a new account and create this separate account, but that's going to add more complexity to your financial life. And wouldn't it be better I actually just closed down a checking account this week because I'm trying to keep things more streamlined. I have too many accounts. And so one idea that came to me is, look, you have Cedar Fair. You don't auto reinvest the dividends on Cedar Fair because it would be messy. This is a master limited partnership. I need to make bigger purchases. I have to keep very close track of the tranches for accounting purposes because this is a more complex one from an accounting standpoint. I will link in the description below to a video about Cedar Fair so you can learn all about that stuff. I have some really good videos on Cedar Fair that I'll link to that I did a number of months ago. Anyways, what I started thinking is one idea is just put a lot of money into Cedar Fair right now. It's an amusement park company. It's kind of got that vacation theme. And you're not reinvesting the distributions from Cedar Fair anyways, the master limited partnership distributions. Why not just put a ton of money in Cedar Fair and use that to fund vacations? So that's just a new idea I came up with today. Now, I don't want to tap into existing cash flow for vacations. I'm trying to reinvest all of that cash flow so that it gets really big and I can use that to pay everyday bills. But I am at a point in my life where I want to start enjoying financial freedom now. And to do that, I'm going to be placing some capital into a vacation fund that will pay dividends that I'm going to use to pay for vacations to Hawaii now, because it's a time in my life where I've delayed a lot of delayed gratification by putting money in the market, letting it grow, and I'm going to continue to delay that because the more I delay paying the bills of dividends, the bigger the pie gets, the bigger the snowball gets. But I'm at the point where I need to start spending some dividends because I'm just at that point in my life where I want to start enjoying life, enjoying it even more. And so one clever idea, again, I had is just put some money in Cedar Fair. It's trading at an attractive valuation now. It's right around where I originally bought it last year in 2018. And I feel comfortable buying here, and 7% off the bat is a big dividend yield. And let's say I can get, over the course of the next few years, a meaningful sum in Cedar Fair. Boy, that would be nice just to take the dividends from that one stock out of my 40, use it to pay the dividends, or use it to pay the bills when it comes to travel. Vacations, family vacations, amazing moments in time with my family in Hawaii. Now, the challenge with that I'm also balancing is I don't want Cedar Fair to get too big. I don't want it to be my biggest position. I don't want it to be so huge. It's in my top 15. It's not in my top 10. And so I have to weigh that as well. And so I'm still evolving in my thinking on this vacation stuff. But one immediate idea I had was just that is I've got a lot of money I could put into Cedar Fair at this point, and it still would not be too big, and it would be a meaningful amount of passive income for the vacation fund. So just something that came to me today. Now, something else I want to discuss today is this concept of time compression, and I'm kind of doing this again. This is vlog style. I want to put it out to the community. I want you guys to share with me in the comments below, how do you all deal with time compression? And I want to share with you what I'm facing in my life right now and one of the reasons I love investing for dividends. On a daily basis, I keep a checklist, and I keep it actually in this very notebook right here, my Stanford notebook. Anyways, I have this concept of time compression, and basically what it means is my days are going by so quickly. My hours, my minutes, everything's going by quickly. Every day I have my checklist. I only get through maybe a fraction of what I want to get through, and I just prioritize. And even midday, hourly, I'm prioritizing, trying to get the right thing done because I know I can't get everything done. A lot of people ask me, why do I film sometimes? My setup isn't that good, this and that. I fit it in when I can fit it in because of the time compression. And I really started experiencing this when I had 2 kids. When we have 2 kids, there's less and less time. But even before having kids, there's always something. I kind of felt time compression because I worked at these jobs where I was working really, really long hours, sometimes up until 3 a.m. at night. At one job, towards the end, I was working till 3 a.m. almost every night. And so there's time compression. Everyone faces it. And I'll tell you, one of the things that I was at risk today of doing was not doing my exercise. I like to go swimming. I've actually stopped going every week. I now go every other week. I try to run a few times a week, pretty consistently here, but I do the swimming every other week now, but it was my week to do it. And I did not want to go because I was in the flow. I was working. I felt the time compression. I'm like, look, if I don't do it, I can get all these things done. But you know what? I just forced myself to go. And I am so happy I did, because what happened is, one, your health is everything. What's the point in having all of these dividends, all of this huge dividend income, if I'm not going to live in a healthy state when I'm older to be able to enjoy it and have the agility, the energy, the physical ability to go out and about and enjoy the money, enjoy traveling, for example. And so that's one thing. 2, though, in swimming today, I had some really good ideas. And so what I found is, when exercising, it's one time I can get my brain off of the topic at hand and I can brainstorm new ideas. And so that was something. And I'll tell you, one of the other things I was just thinking randomly is, there's this guy, Ryan Scribner. You guys probably know him. He's a famous YouTuber in the finance space. And I follow him on Instagram. And he shared a picture recently that really was interesting to me. And he shared, picture of how he basically gained some weight, and now he's in process of losing it again. I think he lost it, actually. He's back in really good shape. And he said, look, the reason I gained this weight is I was too focused on money, too focused on making money. And he said, life has to be more about balance. And I've even found myself in kind of more recent months being a little more lax on my exercise, also a little more lax on what I am eating. And I want to kind of reprioritize that stuff. And so kind of my takeaway here, I'm just kind of vlogging freestyle, but I want to just share that I really face this challenge of time compression, but I don't want to sacrifice anymore the exercise. And so that's just something I'm really focused on now. And I encourage everyone out there, because we're dividend investors here, it's really important as dividend investors to stay in good health, because dividend investing, it's all about living in the now and enjoying the now. And that's why I want to have this vacation fund, for example, because it helps me enjoy the dividends now. But we're also about the future. We're the people out there on YouTube in the finance space who have the vision, who have the discipline, who have the ability to delay gratification, delay some stuff into the future. But in doing that, it means in the future, we all have to be in good health. And so reminder, everyone out there, even if you're facing time compression like I do, stay in good health. And so one of the other things, by the way, if you're out there, I don't know if you face time compression, but one thing that helps me with time compression is just dividend investing. Just by knowing that, hey, I'm doing dividend investing, it's eventually going to automate the income. I won't have to work for income unless I want to. I'll have more time to do stuff. I'll have more flexibility in life. It gives me comfort just to be a dividend investor to deal with time compression. And so that's just one of my tips as well. And then I guess the last tip is, like I said, got the notebook. I basically love having a notebook because I keep checklists. And one thing I want to share with you, if you do face time compression, is it's sometimes psychologically difficult. You think, I got all this stuff, I'm not getting it done. But the amount of stuff you get done on a daily basis is actually pretty huge. And so what I do is I always keep checklists and I check stuff off. But sometimes I'll get something done before it even hits the checklist. And so what I'll do, though, is after it's even done, I'll put it on the checklist and immediately cross it out, check it off, just so I have a tally of what I did. Because oftentimes I'm all worried, I'm not getting enough done, or I didn't get all the things done. But more is getting done than I think. And if I document it, it makes me feel a little better about the time compression. But I really think in this modern world, this concept of time compression, meaning you don't have enough time to get everything done, it's a real pressing issue. And personally, I face it every single day. And look, I'm doing the video in the car. I'm doing it as best as I can with the limited time I have. But personally, dividend stocks, in my opinion, are the answer. Stocks like McDonald's, like Coca-Cola. I'm up 176% on McDonald's. I'm up 65% on Coca-Cola. I'm yielding 6.3% on McDonald's on my first tranche, 5.13% on my first tranche on Coca-Cola. This is the answer. This is how I deal with time compression, is these stocks. They can do the heavy lifting. They can do the work. And it's a road. It's a long road to get to where I need to go. And I got to hustle now. I got to hustle as I'm going. But I got to try to enjoy the moment as well, but allow dividends to give me the comfort about the future. So one other thing I want to touch upon into today's video. Again, I know this is kind of disorganized, but I love you guys. I'm trying to answer questions. One thing that people said in one of the recent videos is, hey, Ian, I like your watch. It looks like a really cool Apple Watch. Nice. And here is the watch, by the way. This is actually not an Apple Watch. This is a Fitbit. And what I want to share with you today is I'm a guy who used to like all of the expensive stuff. But by the way, this shirt's from Old Navy. My wife bought it on sale on Old Navy. I love this stuff because this is a size medium, but it's the slim fit and it's extra tall. So it fits me perfect. Slender, tall, works great. This is affordable. This is real affordable. And as the Fitbit is not as expensive as an Apple Watch, but it gets the job done because I use it for my fitness. I use it to track my steps, my running, my swimming. Works just fine. Maybe doesn't have all the bells and whistles of an Apple Watch, but it gets the job done. Now, what I want to tell you is I'm an Apple shareholder. So you might be thinking, Ian, why as a shareholder don't you just support Apple? It's really comes down to this. When you are an investor, you have to have a different mentality. When you want to live off of dividends, you want to be financially free, you have to think outside of the box. And the way I look at it is this. I can invest in something. I can invest in a company like Apple that sells these fancy, expensive watches, but I don't have to own one. I'd rather own the stock than the watch. That's what it really comes down to for me. Is the Fitbit gets the job done. It looks good. A lot of people confuse it for the Apple Watch. I wasn't trying to go for that kind of image. I don't really care. I really just like the Fitbit, and it does the job for me for my fitness. But again, what I want to share with all of you as you go through your day-to-day life, you're kind of thinking, you know, you're trying to live up to a certain standard or impress the Joneses, impress your neighbor or your people at work. What I always like to do is just impress yourself, and impress yourself with the good deeds you do, obviously, and the good things you do in the community, but also impress yourself with your stocks, with your portfolio. It's okay to own something in terms of a company and investment, even if you don't buy their products, because their products are kind of expensive. Now, I'll tell you, I use Apple products, mainly my MacBook and my iPhone, because I need those. Those are just core to my business and to what I do for work. But Apple Watch kind of ancillary. And so just a fun takeaway. And I know people are commenting on the watch. And so I wanted to bring that up because this is different for me. This is different as someone who in the olden days had a BMW M3 convertible and used to buy expensive stuff that I'm now selling on eBay. I'll link in the description below to that video. And so anyways, that's the video for today. I hope you guys enjoyed it. I know it's a little more impromptu, a little bit different than some of my other videos. And I just want to share in terms of full disclosure, I'm long the stocks I mentioned today. I'm long on Apple, ticker symbol AAPL, on Cedar Fair, ticker symbol FUN, Coca-Cola, ticker symbol KO, and McDonald's, ticker symbol MCD. I own all of those stocks in my personal dividend stock portfolio. In terms of a disclaimer today, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. Literally just sharing my journey here on YouTube for fun. If you're going to go out and invest in the stock market, please consult a licensed financial advisor first. All right, everyone. Very tired PPC Ian here. Long day, but what's funny is it's not over. When I get home now, I can't wait to see my wife and kids, and that's going to be awesome. And we have bedtime routines, all of that. But after that, I'm going to be up late because I actually have a few things left I need to do. I'll actually tell you, this is a good time. We're about halfway through the year here, 2019. What were your goals for 2019? I've revisited mine. I got a lot of goals. Honestly, I'm not hitting a lot of them, but that's okay. I set high goals. One of my goals is finding a new real estate deal this year. You'd know that actually. If you follow me on Instagram, I'll link in the description below. Share a lot of stuff on Instagram. Please check it out. Anyways, I'm developing a commercial real estate property right now in the Greater Bay Area, but I'm looking for my next. One of my goals this year is finding another deal. And so I've literally been pounding the pavement, working my hardest to get the next deal. it looks like I might have one. And so what I'm going to do when I get home later tonight is I actually have some financial modeling I need to do. I have a lot of work getting a deal, finding a deal, getting it approved, all this kind of stuff. A lot of work. And so anyways, that's going to be my night tonight. And so I don't want to sacrifice on sleep too much, because I'll tell you, I have been doing that lately, and it's honestly been affecting my health a little bit. And I'm doing it temporarily, but it can't continue forever. And so that's going to be my evening tonight. Anyways, needless to say, very tired PPC Ian at this point. I love you guys. I'll see you in the next dividend investing video.